What has happened to Toronto's real estate market 12 weeks into the COVID-19 pandemic? Hi there, I'm Nawar Naji, a real estate broker with Chestnut Park Real Estate in the city of Toronto. You have not heard from me in a number of months, and quite frankly, with the COVID-19 pandemic shutting down the economy and unfortunately so many people getting infected and some have died, it just didn't feel right for me to publish a video, to reach out to you guys and talk about real estate. It really didn't matter. It was all about keeping our families, friends, and healthcare providers protected until we got control of this unfortunate pandemic. A lot has happened since then, since middle of March when the economy's come to a complete shutdown, when the borders were closed, airports were closed, people were sent home to work from home, and unfortunately some got laid off. There's a lot that I want to cover in this video, so let's get to it. First thing is the 3 stages of the COVID-19 grief. First, there was the shock and fear, and this is where everyone was not sure what's going on. How bad is this virus, the mortality rate, and for some reason, I still don't get it, why people were rushing to buy toilet paper for 6 months. I just don't get that, and that's a topic for another video. So that was the first phase, is shock and fear, and a lack of understanding what's happening to the economy and to the world and to our families and friends. The second step was acceptance and adaptation. So this is where people are like, okay, we have to work from home. Somehow we have to do remote learning for our kids, which is extremely challenging, and adapting to the new lifestyle. The third phase, which is, I believe we're in right now, and that happened also with the phase 1 opening of Ontario's economy, is acceptance, or I should say moving forward. And this is where people are like understanding that this is a new reality. We have to wear masks, we have to stay 6 feet apart. I still have my job. Things seem to be okay. I can move forward with my original plans that were in place prior to the COVID-19. So I call it BC, before COVID and after COVID. So before COVID, if you recall, January, February, and up to March 15-ish, the market was crazy. There were 12, 15, 20 multiple offers on a property, whether it was a house, a condo, or anything in between. Things were selling extremely fast and significantly over the listing price. Obviously, things have changed now with the COVID-19 pandemic, and I call this after COVID, or living with COVID-19. And this is something that I want to discuss with you in this video. And I'll break it down to the condo market from a resale perspective, the condo market in the rental aspect, and then we'll talk about freehold, so houses and such as detached and semi-detached. For the condo market, we'll talk about the downtown core. So again, this is Dufferin to DVP, Bloor down to the lake, which is the downtown core, and that's the majority of the condo market in the city of Toronto. Now, I saw an article, I think it was a couple of weeks ago, 2 weeks ago, that said the prices came down, and I thought it was, this is a bit of a clickbait, because when I looked at the data, what I saw is more 1-bedrooms selling compared to 2-bedrooms. So 1-bedrooms trade at a lower price, and obviously when you do the average, if you have a higher volume of 1-bedrooms compared to the 2-bedrooms, that average price is going to come down. So it was not a reflection of the reality of the market, because when I look at the data, condos are still selling at or very close to the asking price. Now the mix has changed, again the ratio of 1 to 2 bedrooms, but I'm not seeing to this day, and this video is being recorded the first week of June, I'm not seeing that drop in prices when it comes to the condo market. So again, when you look at headlines, I always encourage you to ask questions. Does this make sense? Reach out to me or whoever you deal with and ask these questions. Like, does this make sense? What are you seeing on the market? What does the data show? And this is where digging through the multiple layers of the analysis helps you understand what's really happening in the marketplace. Now, on the rental side, the rental market has been flooded in the condo space, and a couple of reasons. One is the and this is the biggest impact, is the Airbnb. That market is dead. I mean, think about it. If you're traveling for pleasure, which has stopped, I mean, who's going to jump on a plane? Who's going to go on a cruise? Who's going to go on vacation right now? Probably not many, if any. That market is dried up. And then the business travel, I just don't see that happening because there's a lot of liability and risk for companies to send their employees out to another city to travel and conduct business. You know, they can use the technology that's available, such as Zoom, Skype, FaceTime, and you know, there's multiple platforms out there. Instead of sending their employees on a flight, which has a high risk of, you know, possibility of getting infected, go to a hotel or go to Airbnb, that's just not going to happen. I just don't see that happening for the foreseeable future. And these two, the vacation travel as well as the business travel, has completely, in my opinion, and again, I'm looking at the data, has wiped out the Airbnb market. Some will come back, but it will be nothing like before. So those Airbnb investors who bought to turn their condos into the short-term rental market have two options. One is you put it up for long-term rental. So we're seeing that flood of supply of rentals on the marketplace, or they sell. If the numbers don't make sense, they're just going to exit the market completely and put their condo up for sale. It will take some time for the rental supply to be absorbed. Again, because the first 2 months of COVID-19, and I'm referring to, you know, March 15th to April 15th, and then April 15th to now, first week of June, is, you know, nobody was moving, nobody was buying, nobody was selling, nobody was moving as a tenant. So that whole market, you know, pretty much came to a complete halt. And that happened also with the resale market, where, you know, things were busy, things were extremely active, and then, you know, March 17th with the state of emergency, everything, the whole economy just, you know, it's like fell off a cliff and came to a complete halt. Now, it will take a little bit of time for that supply to be absorbed into the rental market, and then things will balance themselves out with supply and demand coming to an equilibrium. Now, there is some downward pressure on rental prices, so keep that in mind. If you're an investor putting up your condo in the core up for rent, so take the current market conditions into consideration when you're setting the rental price for that specific condo. The other thing that I'm not sure how that's going to play out with the physical distancing requirement, I don't know how these pre-construction projects will be done on time moving forward. I can see developers pushing out their launches into 2021 possibly, or late this year, 2020. I can see some developers saying, forget about it, we're just going to cancel the project. And the reason is, with the physical distancing requirement, until a vaccine is created, I guess, if there will be a vaccine down the line, those projects will get delayed. I just can't see how a group of trades coming into work, you know, you're going to have to monitor, I should say, regulate the traffic, because you can't have all of the trades working together at the same time. You're going to have to split those, I should say, not you, but the developers will have to split those trades into different shifts, different days, different weeks, which will elongate the time it will take to complete these projects. So what I foresee as a possibility is the supply of condos, new condos coming down the line in a couple of years will shrink. So keep that in mind as an investor. If there is low supply down the line, then that will create pent-up demand for rental condos as well as buyers. So because the supply will be low, and you know, I'm not sure how long the economy will take to rebound from all these layoffs, but that can create a shortage or I should say an imbalance between supply and demand down the line. We're talking, you know, 2 to 3 years from now. So that's something to keep in mind. If you can hold on to your condo now, weather the storm, sustain that little bit of downturn in the economy, and then see how things are going to play out down the line, you could actually benefit from possibly a good bounce in the rental demand as well as price appreciation for your condo. Here's my take on the freehold market. So houses, detached, semi-detached, townhomes. I'm actually surprised because this is the first week of June. I thought it will take a little bit of time for the buyers to come back and the market to pick up pace. And the reason I say that is before COVID, so BC, up to March 15, March 17, the market was extremely hot. There were 15 to 25 offers on houses and things were just going crazy. Now, after COVID, now there might be, instead of 15 or 25 potential buyers, it'll be down to 7, 10, 5 to 10 buyers because, again, unfortunately, some have lost their jobs and might lose their job down the line. But because of the extreme low supply of houses, that imbalance, it will not be as severe as it was before COVID compared to what it will be now after COVID. And I'm actually quite surprised because in the last week of May and now first week of June, I've seen houses selling over asking. I've seen preemptive offers, which are bully offers, and I've seen the holdback offer presentation dates coming back to some pockets in areas and houses. So it seems like, and this is anecdotal based on week and a half information and data, the freehold market is coming back with a stronger bounce faster than I thought it would happen after this COVID-19 pandemic came into effect. Now, moving forward, here are the few questions that I have, and again, no one knows the answers, but here are the few questions that I have that could impact the housing market in Toronto and generally speaking in the greater Toronto area. What will happen when the government wage subsidy ends? Because at the end of the day, I think they're running out of ink. Like, I mean, the amount of money they've been printing is just unbelievable. And I understand why they're doing that, which is necessary because they had to buffer the fallout of the economy with everything coming to a halt mid-March. And they had to do what they had to do. But that has to come to an end because paying $2,000 a month can only last so long. 75% wage subsidy can only go so far. 75% commercial rent subsidy can only last so long again. So what will happen when all these government programs come to an end? I'm interested to see, I'm curious, and I hope nothing severely bad will happen because I think there will be some more layoffs from companies because if they're going to come back and operate in the post or after COVID-19 era and environment, where sales are down, they might not need 100% of their employees. They might go to 80% of employees, or they might keep 100% of their employees and go to a 4-day work week, and people take a 20% pay cut. We don't know, but it'll be interesting to see how that will play out when government subsidies come to an end down the line. The second thing is consumer confidence. So psychology plays a big factor into how this economy and economy in general moves forward. And I believe the University of Michigan publishes the Consumer Confidence Index, which is for the US market, but similar in Canada. I mean, if consumers do not have the confidence, and that is based on job security and employment, if that foundation is not there, people are feeling nervous and anxious, then they're not going to go out and buy. But again, it seems like in that freehold market, the detached, semi-detached, we're seeing a strong bounce based on the last week and a half data and information. Again, we'll see how that's going to play out moving down the line once the government subsidies come to an end. The third thing is the interest rates. I just don't see interest rates going up anytime soon. The amount of stimulus that the government has pumped in, CMHC and the government, doing mortgage buyback from the banks to free up their books. I just can't see interest rates going up anywhere in the next so many years because there's a lot of debt that's been taken on by the government, and obviously lower rates will help them manage that government debt moving forward. So that is a stimulus factor that will play into the consumer's confidence, into the buyer's confidence moving forward in the future. I have 3 tips for buyers and sellers. We'll start with the sellers. If you're a seller, my first tip is price your home according to the market conditions. Now again, this is generic, but you could be in a specific pocket that's very desirable and there's a lot of demand for that pocket, and maybe you can do the holdback offers. So underlist it, holdback offers, and get over asking. But generally speaking, list it at market value, market price, and then the second thing is expect to negotiate on price and terms. So you might get your price, but it might be conditional on inspection, conditional on financing. I think, you know, I'm seeing a lot more of those type of normal type of offers coming in, which is normal, and I think that's a good thing, people doing their due diligence. But as a seller, expect that could be a possibility moving forward. The third thing is don't wait, because like I mentioned a minute ago, is we don't know when these government subsidies for the employers is 75% of wages, $2,000 a month, and then the commercial rent program. When those programs end, what will happen? We don't know. Will there be a second wave of COVID-19 in the fall? We don't know. So if you're thinking of selling, have been contemplating selling, you know, just take advantage of the opportunity now, because it seems like there's a bit of a strong bounce back, and put your property for sale at this time, as opposed to wait till September, October, and because who knows what will happen at that time. I have 3 tips for buyers. Here's number 1. Take advantage of this opportunity, of this time frame. If you remember in 2008, 2009, people have looked back and said, I should have bought at that time. Now, if you have job security moving forward, then again, and you were looking before COVID in that January, February, and you were frustrated, this might be an opportune time for you to jump in, because instead of having 15 other people to compete against, you might have 1 or 2 or none. So take advantage if you have the job security. The second point is free money. I mean, the rates I've been looking at, it's crazy. It's free money that's gonna help you as a home buyer or a real estate investor to buy that specific property and have extremely low carrying costs. Now, make sure, we'll talk about the savings part, but you know, low carrying costs. Rates are low, and take advantage of that opportunity. The third part is getting a deal, and I've talked to a bunch of prospective buyers. Getting a deal means not competing with others or competing against 1 or 2. It does not mean if a property listed for 800, you put an offer for 500 or 600. That's just not happening right now. So keep that in mind. Getting a deal is getting the property that you want without severe competition. So keep those 3 points in mind if you are ready to go back and jump into the marketplace. The last tip that I have for everyone, including myself, we've learned a lot over the last 2 to 3 months from this COVID-19 pandemic. And the tip is have 6 months of savings stashed in a TFSA, in a good old boring saving account, because we just don't know. We don't know what's gonna happen in the fall, second wave. We don't know what happens when this stimulus runs out. We don't know. So it's good to really stash money under the mattress, as a joke, but you know, stash it into a savings account for those emergency days, because you never know what could happen in the future, and having that slush fund to survive you know, to pay for your cost of living, your home, heat, hydro, food on the table. It's a good peace of mind to have those savings set aside. I hope this video finds you and your families in good health. I hope you're doing well, and please feel free to reach out, whether you're looking to buy an investment property, whether you're looking to sell or buy, you're not sure what to do first, or you're looking to sell your investment. I'm more than happy to give you the facts, discuss the details that are specific to you depending on your circumstances and your location. Feel free to reach out. I'm glad to connect with you and talk with you if you have any questions. Thank you so much for watching. Make sure you like, comment, and subscribe. Until next time, happy investing.